If someone tells you to trade like a robot, run. That is the worst advice you will ever hear. I've been trading for over 30 years, and I can tell you with confidence that getting rid of your emotions just isn't going to happen. The real goal should be to manage your emotions. That's the difference between traders who make a living and traders who blow up their accounts. And here's the thing. Every trading psychology problem you're dealing with stems from just two emotions, greed and fear. And in the next few minutes, I'm going to reveal how they show up in your trading and how to master them. The tennis legend Roger Federer said that winning a great point didn't faze him, and making a terrible mistake didn't shake him either. He stayed completely neutral. And that's genius for tennis. But in trading, every point you win or lose is tied to money. Money that can pay your rent, money that can feed your family, money that can eventually change your life. So expecting yourself to feel nothing after a heavy loss or a substantial win is not realistic at all. That's why the only way out is to control, to manage those inevitable emotions. The numbers absolutely back this up. Recent surveys show that emotional decision-making is the primary cause of losses for over 70% of retail traders. But those who received psychological training experienced a 30% increase in account survivability after 1 year compared to those who did not. Today, I look at emotions and I see one thing: data. Fear may be telling you that your risk might be too high or that your setup is weak. Greed may be signaling an opportunity, but reminding you to stick to your system. Frustration may mean that you probably broke a rule. When I feel anxious before a trade, I don't try to suppress it. I acknowledge it, and I say to myself, I am a disciplined trader who feels anxious, but I follow my plan. That simple reframe helps me stay anchored. So without further ado, let's dive into the biggest culprit that turns traders into gamblers and how to control it. Greed. This is the emotion that creates tunnel vision. Suddenly, you're staring at one trade like it's going to change your life. This one trade that's going to make your entire month, your year, maybe even set you free. But that's not trading. That is a lottery ticket. And lottery odds are the worst in any game. And that is not what we want to do. Trading doesn't work in single shots, but over hundreds and hundreds of trades where probabilities play out and your actual edge matters. Greed blinds you to that reality. Let me show you exactly how greed sabotages you. First, over trading. This is when you take too many trades, accept low quality setups, or force trades that don't exist based on your strategy. It usually happens because you're bored or you feel like you have to be doing something. The solution isn't more discipline. What you need are better boundaries. Start defining what an A+ setup actually looks like. Write down the exact things you need to see before you take a trade. No guessing, no feeling it. If it doesn't check all the boxes, skip it. That's how you keep emotions out of the driver's seat. Next, use time. When I'm day trading, I will wait at least 5 minutes after the opening bell. When swing trading, I will wait until the first hour of trading has completed after the bell. This timing will force you to slow down so your decision comes from logic, not impulse, and you avoid chaotic periods in the market. And finally, give yourself a daily trade limit. Once you hit that number, you are done for the day, no matter what. That one rule alone can save you from revenge trading and the emotional spirals. The second problem really is over leveraging, or what I like to call the big one, right? We're going to catch the big one mentality. This is the one big home run. You risk too much on one trade, hoping for that massive life-changing win. But when it goes wrong, and it will, one loss can erase months of progress, or I've even seen entire accounts. But the fix is really simple. Set hard limits and stick to them. Never risk more than 2 to 3% of your account on any single trade. Also, the same as with over trading, create a daily loss limit. It could be $1,000 or maybe 2 or 3% of your account, or 3 losses in a row, whatever fits your comfort zone. Once you hit that number, you stop trading for the day. No exceptions. And here's a little trick. Set your daily loss limit at or below what you usually make on a good day. That way, you're not just avoiding disaster, but you're protecting your consistency. Third is revenge trading. This one happens naturally to every trader because of how the brain is actually wired. Losing money hurts twice as much as winning feels good. That stinks, but that's the reality of it. That disproportionate pain creates an irrational decision to get it back immediately. And that's when 90% of traders blow up their accounts. Willpower is not going to save you in the heat of the moment. That's why your solution has to be structural, not emotional. Write down these 2 simple rules on a sticky note and keep them right where you can see them when you're trading. Rule number 1, after 3 consecutive losses, you step away. End of session. No one more trade, no exceptions. Rule number 2, remove the stock from your watch list. Delete it completely. This creates a hard mental break and prevents you from the revenge trading of that same instrument with a larger position, because that symbol took your money and that symbol has to pay you back. These are the non-negotiable rules that help me protect my gains for over 30 plus years of trading. Please check them out, try them, and see for yourself. If you're starting to see where the structure beats emotion, this is exactly what I do at my website. The link is in the description below. Now, greed pushes you to overtrade, but fear, that's going to do the opposite. It will keep you frozen, paralyzed on the sidelines until hesitation becomes your biggest loss. Fear is the most deceptive of emotions because in trading, it wears so many different masks. It can make you pull back when you should step in, or push you to jump in harder just to avoid missing out. Sometimes it looks like hesitation. Other times it looks like impulsiveness. Either way, it's fear running the show, and it will cost you money. There are 4 main ways fear show up in your trading. And I'm going to show you how you can control, even just recognize all of these. First, fear of being wrong. You know when you're in an argument and halfway through, you forget completely what you were arguing about. You just needed to be right. Been there, done that. And that is your ego trying to protect yourself, because being wrong, well, it hurts. So you defend the position no matter what. In trading, that same instinct shows up all the time. Your ego wants to be right here. But in order to be profitable in long-term trading in your career, you don't need to be right all the time. You need to be profitable. When your identity is tied to an outcome of every single trade, losing doesn't just hurt your capital, it hurts your ego. So you hold on to losers too long, trying to prove you're right. Prove to who, right? Or worse, you jump into revenge trades to validate your original idea. The solution is, again, to treat every loss as data, not as a personal defeat. The market is not out to get you. You're going to be wrong sometimes. That's just part of the game. It doesn't mean you're not intelligent, doesn't mean you're not capable. It just means that anything can happen in the market. So stop being a predictor and start being a risk manager. Now, the second mask of fear that everyone can wear is the fear of losing or hesitation. This is when you second guess yourself. You miss opportunities you knew would work. They met the criteria. The solution comes in finding your risk sweet spot. Your position size needs to be large enough that you care about the trade, but small enough that the potential loss does not terrify you. It's not enough to think about a 2% risk. That 2% has to feel comfortable. That means before you enter a trade, you need to know your worst case outcome, your stop loss triggers. If that dollar amount causes genuine anxiety, that position is too big. Simply reduce it, and the problem is solved. Next up, the modern trader's poison, FOMO, or fear of missing out. You open X stock, and everyone's bragging about 100%, 200% gains. So you feel behind, so you chase it. Not because your setup told you to, but because you can't stand being left out. FOMO feeds on 3 things: hype, volatility, and the lack of patience. That's the pattern. You chase, you break discipline, and you buy too late every single time. The antidote lies in realizing there will always be another trade, another setup, another chance. That's the infinity principle in a nutshell. Also, deep down, it's greed, the need to escape the grind and score what you think are easy profits. The moment you sense that urge to chase, recognize the feeling and use that opportunity to return to your structure. Your plan is there to protect you from you. Now, fear doesn't always shout. Sometimes it whispers through your lack of confidence. You'll notice it in the endless strategy changes, strategy hopping as it's known, the hesitation to trust your own rules, something else is working better, and the constant second guessing. Confidence grows to evidence that what you're doing works, not through emotion. Emotion can lie to us. Every correctly executed trade adds to that foundation, that belief. If I were to start from scratch, I would find a mentor. A good mentor compresses years, if not decades, of confusion into clarity and structure. The two things most traders lack on their own. They become your mirror, turning discipline into habit and habit into confidence. They hold you accountable. They keep you journaling, and they guide you through one of the most profitable yet unforgiving careers in existence. That external anchor transforms discipline into consistency and consistency into mastery. At the end of the day, all of these problems, overtrading, over-leveraging, FOMO, hesitation, they all stem from a lack of discipline. But here is the good news. Discipline is a skill you can build. It starts with having the right rules, the right structure, and the right mindset. I've linked all the resources in the description that will start helping you build that structure today. It's what I do every single day in my trading room. And if you're ready to take it further and work with me directly in my live trading room, where I share my time-tested trading plan, my time-tested indicators that actually fit today's market and today's trading psychology, well, you know where to find me. Picture yourself 6 months from now, calm, confident, executing trades without second guessing, and finally seeing your account consistently grow. Stay tuned, because in the next video, I'll show you something that completely changed the way I approach the markets. You don't want to miss it.